Hey, everybody. Welcome to Friday. It's been a long week. Shout out to everybody here who made it. Thank you for coming. We're going to talk about some interesting stuff today, including a big breakthrough from what they call SCOTUS, the Supreme Court of the United States, and how that has a huge impact on the SEC and on Bitcoin and crypto space itself. We'll dig into that for very briefly. As you know, KPM, I do everything in 60 seconds, so I don't waste your time. Let me see. Crypto market cap is a little bit lower than it was, but Bitcoin price is higher than it was on Monday. But it's been another doldrum, quiet week. Right now, as I stand here, Bitcoin's $60,250. Woohoo! It's gone basically nowhere, and it's been flat for a while. But that's okay. We have two community members today became whole coiners because they got a chance to stack at 60K. So that's a little bit of a silver lining. Fear and greed, we'll get into that too. That is bouncing nicely, which is good. And I'm going to talk about the long-term holder net change. We're going to talk about the Chevron deference and what that actually means and how the SEC is suing everybody. They've kind of made their commitment to try and destroy all things Bitcoin and crypto if possible. Regulatory overreach, whatever you want to talk about. We'll talk a bit about Bitcoin volatility, and we'll talk about some of the stuff that's happening with miners. Some very interesting mergers and acquisitions and defense from mergers and acquisitions. And I'll do some miner calculations as well, what a megawatt hour means in terms of rigs, what it means in terms of Bitcoin. Anyway, thank you so much for coming, Mr. Zhu and Do the Poleman. Let's jump in. None of this financial advice, as you know. Let's get into the news. First of all, fear and greed has bounced. It's been bouncing now for a couple of days off the lows, nearly at 50 again. And that's good. People are not terrified anymore. When things fall fast, people get really nervous. Sometimes they pull the plug and they sell when they should actually be buying on the dips. Anyway, let's get into the SEC. They continue to go after crypto, Fingerless Cave. And I know this is a Bitcoin video, but the point is, the SEC does not want crypto there, and they're stifling innovation. They're stifling companies that want to build things and make things better, which impacts both Bitcoin adoption, crypto adoption. Nick M as well, thank you for coming. So this is not good. If you look at the total list of all the SEC lawsuits that are in play right now, they are suing Uniswap, they are suing Kraken, they are suing Coinbase. By the way, Kraken, Coinbase, Robinhood all sell Bitcoin. They are suing MetaMask. They are suing Lido and Rocket Pool. They just keep on suing without any proper basis, which takes me to this point. And a shout out to Balaji, who put this beautiful little graphic together. There's a thing called the Chevron deference, and it can be explained in three simple ways. One, regulatory overreach is part of it. So, for example, previous regulators like the FDA, the EPA, the SEC were open to interpret vague laws to expand their authority to areas that they shouldn't be expanding into at all. And this broad interpretation was known as the Chevron defense. So things like the Howey test you've heard about for a long time, ta-da, it was written, 1913, over 100 years ago, and they apply that to crypto, which doesn't make any sense. Also, there's an area called judicial scrutiny, and that's the reversal of the Chevron defense. Courts now require regulators to point to clear and specific congressional authorization for their actions. This means regulators can no longer create rules without explicit legislative backing. Now, why this is good, that means they're going to have to start writing a whole bunch of mini laws that cater to digital assets. They can no longer refer to 1930s security laws and say, oh, it's under this. No, that's not what they can do anymore, which is great news. It'll also help boost innovation because it'll remove barriers for new technologies and startups. For example, people building layer 2s on Bitcoin, that they'll help them. It'll keep the regulatory bodies out of their face, basically, so they can continue to build. And this, in the past, has impacted so many areas, not just crypto, but genomics, nuclear power, etc. So we need innovation. By the way, I invest in disruption, which is innovation, and I don't like innovation being stifled. So this is a big, big day for crypto and innovation in general. Now, the other way to think about it too is, again, as I go back, I think it was 1933, the original securities law was written, and the SEC claims regulatory authority over crypto assets, despite cryptocurrencies not being mentioned in the original 1933 and 1934 security laws. So the point of this, real simple, is Chevron deference. They can no longer point to these laws and say crypto is under it. So it's a good day for the space. And Caitlin Long chimed in too. The Biden-Warren strikes again against crypto. Now, I don't know if it's those two specifically. It's definitely the SEC. And either way, what the basic net of what Caitlin's saying here is their power is peaked. They are now past peak power. So the Warrens and the anti-crypto army, etc., they can no longer work. It's downhill from here. And hopefully they'll be out of office too. Because, again, I like innovation. I also like crypto too. So I don't like things that are against that. Now, back to miners. We'll talk a bit about miners today because that's very important for the whole space. They keep the network secure. But there will be an 8% difficulty adjustment downwards, well, 7.64% within a couple of days. And interestingly enough, too, the next Bitcoin halving is about 1,390 days away and expected to land on the 18th of April, 2028. So we're going to be going through a lot of undulations in that time frame. But let's get through this bull market first. And I'm actually kind of looking forward to the bear market because that's when you can stack and get good deals. Super Soul Man Zeno, thank you for coming too. Now, I will talk a bit about some other data too. Volatility. Bitcoin volatility recently has sent shockwaves through the derivatives market, particularly between June 23rd and June 27th. It's now June 28th. So this week has been a bumpy one. And of course, Bitcoin fell below the 60K mark, which was also below the short-term holder realized price. And this price movement triggered a cascade of events, including open interest in Bitcoin futures has tanked significantly due to margin calls and forced liquidations. And we also have the funding rate very close to being negative. That's why we saw the hedge funds pull out of the ETF trade, the carry trade we spoke about for a long time. That has all impacted the space. So again, sometimes when all this leverage is flushed and the manipulators are flushed and the carry traders are flushed and the miners stop selling, then we can get back to business and start moving up again. So it is also the summer. Not a lot happens, but hold tight. There's a few little bright sparks. First of all, speaking of sparks, CleanSpark did acquire GRIID. I didn't mean for that pun to fall out. Sometimes they just do. I just run off. I just riff here live in front of you guys every single day. And gals, thank you all for being here. CleanSpark bought a company called GRIID Infrastructure. All stock deal, $150 million worth. And they will expand their capacity significantly with over 400 megawatts expected to be added in the state of Tennessee over the next 2 years. And CleanSpark will, they've been mining in different places like Georgia, Nevada, etc. They recently expanded to Mississippi. Now they're in Tennessee. And this will be an interesting deal. Now, I asked myself, it's like 400 megawatts. What does that mean in terms of how many rigs? Here's a simple calculation. Correct me if I'm wrong with this calculation, by the way. But I calculated 400 megawatts is 400,000 kilowatts. If you take the amount of kilowatts used per miner, it's about 3.25. So 400 megawatts should power about 123,077 miners, which will mint a lot of Bitcoin, even at a high hash rate. So that should accelerate their scaling plans as well to get to 50 exahash in a pretty short window of time. And speaking of CleanSpark, a new analyst came out too. By the way, this is, due to popular demand, people have requested I talk about Bitcoin proxies as well as Bitcoin during these videos, like the MicroStrategies and the miners and the assemblers, etc. So that's what you're getting. The Great Escape, thank you for coming. CleanSpark has been maintained with a new $27 per share target by H.C. Wainwright, and they are the top Bitcoin miner analysts. Their work is very, very good. So 27 isn't bad. That's nearly a 2x from here. In fact, CleanSpark fell to nearly my $15 target today. Didn't quite get there, so we didn't buy. Again, we wait. Also, BitDeer another interesting play. They are expanding their power capacity pipeline to 2.5 gigawatts with 570 megawatt strategic partnership with Monroe County Port Authority in Ohio. So it's interesting to see how a lot of these miners are still expanding in the United States. People thought, oh, US is going to ban Bitcoin mining. It's like, no. Dr. Sauce, thank you so much. And by the way, the AI revolution that's happening at the same time has somehow given the Bitcoin miners a breather, because they are no longer the power hogs by no stretch of the imagination. Of course, air conditioning uses way more electricity than Bitcoin mining. Clothes dryers use more electricity. The banking industry uses way more electricity. And of course, AI data centers, way more electricity. So it's like now the American Bitcoin miners can simply just expand away and use that stranded energy at a very cheap price as best they can. Speaking of another one or two, not BitDeer, but Bitfarms, they shook up their board. I am called Happy Friday. This is a Bitfarms Canadian Bitcoin miner. They appointed a new independent director, Fanny Phillip, to its board on Tuesday, and now the board comprises of 5 directors, 4 of which are independent, in its latest attempt to avoid a takeover from RIOT. RIOT is not giving up. RIOT own about, I think, 16% of the stock last time I checked, and they want it all. So again, it's a nice floor on the Bitfarms price as well. Another bit of crypto news I covered yesterday in a separate video, but more stuff is coming to the space. Van Eck was just followed by Ark to file a spot ETF for Solana 2. I thought I'd just squeeze that in here because, again, brings more money into the whole space, which floats all our boats. Now, a little bit of macro news too, and it's so funny to see this from David Rosenberg. I've been saying this for at least a year and a half, 2 years, that half the US is already in a recession and the housing market is beginning to roll over. By the way, rolling over is not a good thing. And everyone in the low and middle income households who did not feel the pressure of high prices in the past due to fiscal stimulus are now feeling the pinch. It's ugly. I shared another stat on Patreon this morning, which is very alarming, that something like 2/3 of all people that earn $250,000 a year, 2/3 of them live paycheck to paycheck. That's how crazy things have become. And I know that, you're earning $250,000, but if you're living in certain states where you have state and federal tax, you could be paying 52% of that away in taxes. So you left $125K, you got a couple of kids and a mortgage and a car payment, etc. It doesn't last long. And that's the crazy thing to understand. Anyway, check out that post on Patreon too. And I thought this was a funny little cartoon to share. Is this? I learned recently who these yellow characters are. They're called the Simpsons, I think. I hope I didn't get that wrong. And what you do when you're watching the fiat system collapsing when you own Bitcoin. Have your life raft ready. I always talk about a life raft, and I thought this was kind of funny. The guy is just sitting there with his kids, drinking a coffee, watching the ship go down, because all fiat will go down. That is guaranteed. And a little bit of Bitcoin history fun before we get into the charts. Wow, that was 20 segment news. I didn't realize it was so big. Friday, normally a quiet day, not today, but this is the best trading advice in Bitcoin history from the Bitcoin historian. It's true at 11,000 and it's true today. Eric Voorhees, guru in the space, he says, keep buying Bitcoin until CNBC, which I call CNBS, says to buy it. That was in 2019. And Bitcoin was $11,000 then. It fell to about under 4,000 in March 2020, a year later. But I love that. So remember, whatever CNBS says, do the opposite. Good financial advice there. Now, Bitcoin chart time. Let's break down a couple of things. One, just to explain how Bitcoin is so seasonal and summers suck. Obviously, the doldrums. The market doesn't necessarily crash, but doesn't also necessarily go anywhere. But this was an interesting thing to analyze. This is the Bitcoin quarterly returns since 2013, because before that, it was all over the place. But if you look at the best quarter on average, it's Q4. And the average return for Q4 is 88.84%. And it's even higher in Q4. in bull run years like we are today. So again, the reason I share this is, yes, the summer sucks, but hang on, because fireworks go off a little bit in Q3 and a lot in Q4, which, considering Q2 is nearly over, it's only 12 weeks to go before we start getting to the real fireworks. 2017 was interesting. All quarters were positive. And what else? 2020, very high returns in Q2, Q3, and very high in Q4. But remember, this time is different. So far, our Q2 is red. I don't see it changing in the next 2 days, so assume Q2 will be a red one. For now, we are currently down about 9.8% for the quarter, but Q1 was 68% and Q4 was nearly 60% last year. So again, hang tight, and remember as well, if you look at the historic bull market years, say 2020, only one quarter was red. 2016, 2 quarters were red, 2 were green, but those quarters were only like 3% red, so it doesn't really count. If we go back to 2013, 3 quarters were green, and the red quarter was only down 3%. So again, it will be a good year. I'm pretty sure of that. We just need to flush some stuff out of the system first. Now, in other good news from on-chain, information from Blockware, this is the long-term holder net position change. And yes, there's been a bit of a struggle over the last month or so, but now we are seeing net accumulation by long-term holders for the first time this year. And as the price ripped in Q4 and Q1, like we just showed, we saw a net decrease in long-term supply as some holders sold before the halving. My theory, why they sold before the halving, was to get out of Bitcoin and move into ETFs for security reasons. That's why I still stick to that, why I believe long-term holders sold before the halving, which is normally very unusual behavior. But that's my theory, and I'm sticking to it. What else is going on here? Net distribution from long-term holders is, again, that was the big red dip you see there, especially in March 2024 as we hit new all-time highs. That was their time to pull the trigger, but the stacking has begun, and for the long-term holders, and again, this shift to a regime of net accumulation is normally very bullish for the space. So, one piece of good news after a weird Friday, but this is not so good news, especially if you're a believer in Metcalfe's law like I am. This is the ratio of Bitcoin addresses, and you can see here that it has plummeted to its lowest level since November 2010, according to on-chain data from Into the Block. In June, we saw active wallet ratio drop to a low of 1.22%, while peaking at 1.32%, and the month's highest ratio was last seen in November 2010. Okay, if you look at just the green line, that's active addresses, we're basically down at 2018 levels as well. So the point is, there aren't a lot of active wallets on the chain, and I think it's about 614,000 of them. And a declining active address ratio indicates a lack of buying and selling activity among Bitcoin holders, suggesting a phase of market consolidation. It'll pop back up, but again, another reflection of the summer doldrums in which we're in right now as well. Also, I do believe when you have a lot of, nearly 1 million Bitcoin floating into the ETFs in a very short window of time, that takes Bitcoin out of the system, which of course will reduce the activity on the chain. So I gotta really go back to the drawing board. We got 2 Metcalfe's models here. We're brushing them up for all the new data. And how do we modify them to cater to this new world order of ETFs? Interesting. So another thing to solve. Also, Bitcoin energy gravity, going back to miners. This is from Joe Burnett. And he always talks about the fact that when the price of Bitcoin is near its median cost of production, this has been a good time to accumulate Bitcoin. Also, tying into energy gravity here, right now the cost to mine a Bitcoin using a modern new gen ASIC is about $53,475 worth of energy to produce 1 Bitcoin. And that's going down by nearly 8% in a week. So this will fall further, which means then we'll go a little bit higher. But net, Joe Burnett says, good time to stack when we're at this low level here. Also, this is another piece of good news. Got to dig deep to find the good news these days. Bitcoin miners' selling pressure has decreased. This is from CryptoQuant. And the selling pressure of miners is weakening. And if all of their selling volume is absorbed, a situation may be created where the upward rally can continue again. So we're going to watch this space carefully. We do know, I've been reporting multiple times over the past couple of weeks, that Bitcoin miner reserves have hit all-time lows. A new all-time low, I think, on Tuesday or Wednesday. About 163,000 Bitcoin is all they have left in their bags. And remember, this includes miners that are in different parts of the world, not US publicly traded miners. There are other ones. And 2/3 of all the publicly traded miners that we analyze here have ditched all their bags. They have no hodl anymore. So it's another good thing. When these guys are done selling, which it looks like they're close to being done, Germany is done selling, US is done selling, Mt. Gox is cleared, and many believe as well, like I believe, I just read an article this morning, that the Mt. Gox flush will not be anywhere near as bad as people think. So don't worry too much about that. And there's somebody else stacking, Mr. 100. This is interesting. In just over 4 days, Mr. 100 did 10 buys. They bought 1,046.72 Bitcoin, and they dropped about $64.67 million into it. Not bad in just over 4 days. And that far exceeds some of the purchases made by the ETFs, which we'll see in a minute. And yes, Mr. 100 is not a centralized exchange wallet. That is not the activity of this. This is some sovereign somewhere or some top 10 billionaire on the planet. Or who knows? It could be Michael Dell. It could be Putin. It could be Saudi Arabia. We don't know. And I covered yesterday, Saudi Arabia are out of petrodollars. They ditched them all. Maybe it's Saudi Arabia just diversifying into AI and Bitcoin and other things. We don't know. Hopefully one day we'll find out as well. Bitcoin Only playlist will be at the very end. You'll see it. You can subscribe to it if you want. It includes proxies. Let's talk about day 117. It's almost comical. BlackRock does $1 billion a day. And they've had in the last, say, 10 days, 1, 2, 3, 4, 5, 6, 7, 8, 9, zero volume. Zero. No addition, no deletion of any Bitcoin. So that means all the traders are buying and selling equal amounts every single time over the last 9 days, which is impossible, which means market-making games are happening. 99% convinced of that. Could be wrong, but looks strange. But the good news is Fidelity had 3 positive days. BITB Bitwise had 2 positive days. Ark had a positive day yesterday. EasyBC as well. And Bitco, all positive days. Grayscale had a little minus 11 million day. But net, we had 3 positive days in a row. And that was good. After having a record number of negative days in a row too. The macro update doesn't look very exciting. You can see that the excitement has dwindled from the space. But again, the investment advisors are sharpening their pencils. They're still trying to understand what this Bitcoin thing is. But one thing is super interesting for me is every time I look at the chart, every time we dip to 60K like we did about an hour ago, it gets bought up. I can watch the volume come in, the buyers come in immediately. So people have limit orders to buy when we get low, and that's sucking up any dumpage that is happening from other players. And like I mentioned, 3rd positive day after a record-breaking sell-off, which was, I can't remember the exact amount, 1.5 billion or 1.3 billion. And we've had 3 little positive days, but not very big. But you know, behind the scenes, BlackRock is stacking. They're just not reflecting it right now. I wish they'd have a transparent wallet I could look at every day. Anyway, yesterday 192 Bitcoin were taken from the system from 450 daily issuance. And the Grayscale dump is back on trend, minus 11 million. So, right at the very end, I lose my voice, just in time. Thank you all for coming. Appreciate everybody. Have a great Friday, great weekend. I'll see you all tomorrow for the weekend recap. And no, motivational mango is not me. No, I'm not Mr. 100. It'd be fun to be able to buy even 100 solid day. Would cost a lot these days. So we'll see. Anyway, thank you, T&D Tesla. Thank you, Sean Donnelly. Thank you, everybody, for coming from all over the world. Living like a panda too. That's a wrap. See you tomorrow. Bye-bye.